What a time to be alive. If you own real estate in Central Texas, Austin surrounding area, we've seen our homesteads, our investment properties grow exponentially in value. It almost seems like a fairy tale, but it's real. And what we're seeing with our successful families is many families in retirement are considering downsizing. Maybe they just want to walk in the appreciation that they've seen over the last 5-10 years. Maybe they want to move closer to grandkids, whatever it is. There's some things you really need to consider if you're going to sell a home or an investment property. You need to stay tuned today. Chris Heerlein here, everyone, partner at REAP Financial, host of Retire Ready TV on KXAN, and host of Wealth Radio on News Radio KLBJ, that's 590 AM, right here in Austin, Texas. Tune in with me every week, 1 p.m. Saturdays, to stay on top of the latest. Now let's dive in. If you have a highly appreciated home here in Austin, surrounding areas, let me tell you something. Congratulations. It's been a wild ride. And the question is will values keep going up? My opinion is they will. But if you're in a position where you're considering selling your house, there's two things I really want you to consider, particularly if you are retired or getting ready to retire. When you sell a homestead, the government allows you as a single filer to realize $250,000 of gains in the sale of your homestead. If you're a married filer, $500,000 of gains tax-free. It's a pretty good deal. Now, with the appreciation we've seen over the last 5-10 years in Austin real estate, many people are selling their homes and they're cashing out with a lot more equity than $250,000 or $500,000. And if that's you, here's what you need to consider. This capital gain, anything above that $250,000 limit as a single or a $500,000 limit as a married file, anything above that could be taxable at capital gains rates. Capital gains rates right now in this country are favorable. 15% if your income's under $400,000 married, and 20% at the very top. So more favorable than most of our income tax rates. But here's where the consideration comes in, the timing. We have a new administration in DC that has touted taking capital gains rates up to 43%. Now, I don't think they're going to go that high, but there's proposals on the table this year where we could see capital gains go to 25, 28, 30%. I think they'll land somewhere between 25, somewhere maybe 28. But the point is if you're considering selling the house, this may be the golden opportunity. Taxes may never be this low again in this country. And so you could save dollars, keep money in your pocket if you sell while the tax rates are still low. The other thing to consider, interest rates have been on sale as well. The money has been dirt cheap in this country for the last couple of years since COVID, and interest rates are going up here in 2022. So if you're gonna sell a house and go purchase something else and you're considering financing, it may be a good idea to lock in these historically low rates. But here's the bigger consideration. It's not just the taxes. When you sell a highly appreciated home, it could spike your Medicare premiums. This is something that many people don't see coming. If you're 65, 68, 70 plus on Medicare and you have a large capital event, you may get a letter in the mail next year after you sold your house this year that says, hey, congratulations on your windfall. It won't read like that necessarily, but it will identify that you had income over the base Medicare premium limits. And the issue is we have families that have sold a property, they don't consult with their CPA or us, their fiduciary advisor, and then they get that letter in the mail and it's too late. Now they're paying hundreds, sometimes $300, $400, $500 more for Medicare than they were just paying the year before because you had a nice capital gain, a nice windfall. Now there's strategies to get around this, and you need to consult with the CPA prior to this, but we don't want to see you blindsided by what I call the stealth tax. When you think about Medicare premiums, you're paying for healthcare services. They take it right out of your Social Security check. So you don't really think about it as a tax. But I view it as a tax, and maybe you should too, because you could be paying more money for the same thing your next door neighbor's getting because you had a highly appreciated home, or you have a nice income, or you did a good job of saving. Don't let this blindside you when it comes to selling a home. Every week we join you on this channel to ensure you can make smart decisions about your money and truly optimize your financial world. If you enjoy our channel, Click the subscribe button down below, engage with us. Leave a comment, and if you like today's topic, give us a thumbs up. If you want to get more educated on the stealth tax, I want you to get your hands on my new report. It's called the American Stealth Tax, all around how to strategize to keep your Medicare premiums at the bare minimum and not overpay for the same thing. Email me right now, retire@reapfinancial.com. That's retire@reapfinancial.com, and my team will have it on its way to your inbox. Until then, all the best.